Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind there's risk involved with each trade that you take. No one trade is guaranteed to bring profits, so you want to manage risk in a way that makes sense for you, in line with your risk tolerance and your profit goals. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our WebTrader platform, which allows you to trade on MT4 and MT5 accounts from one location, but with the advanced tools that we offer both within our WebTrader and our app. And so if you log in the upper right corner here, we'll be in the WebTrader. And there's been quite a bit going on fundamentally, so it's a good time to have a fundamental based webinar. If you haven't paid attention, there's been quite a bit going on with the Trump administration with regards to tariff threats and maybe working deals out in the hours and days that followed those tariff threats. And so, initially it was with Mexico and then shortly thereafter with Canada, 25% tariff threats, and shortly after that, a 10% tariff threat against China. And what we saw was this here as a result, dropping on Friday leading up to the weekend as the news came out about the tariffs to be implemented. I think it was supposed to be on Saturday over the weekend, this past weekend. And then the market opening with a huge gap down this week for the same reason. And then the realization that things were getting worked out with Canada and Mexico, and up went the market back up. And then as the week went by, the realization that there were going to be some talks with China, and neither side really wanted to get into a trade war with tariffs being raised back and forth. Although China did promise certain tariffs would be added as well if the US follows through with their 10% tariffs. And so as the week went along, not only were these gains brought back from the gap down at the start of the week, but now since yesterday, we've broken through this resistance level and up we went towards the resistance up here, which was back towards the all-time highs that we were at before all of this fear hit with the tariff threats. And so you can see the power of fundamental news right there. From the end of last week into the start of this week, all of the fear with tariff threats, then the fundamental news flipping that things were being worked out, at least with Canada and Mexico for the time being, and then the idea that things might get worked out with China, and up we went. And so we haven't gone skyrocketing up towards the all-time highs yet on, this is the US 500 that we're looking at here, a US index. The Dow Jones Industrials are doing a little better because they aren't bogged down by the tech fears. Remember, there's some fears about AI development in China, maybe hurting NVIDIA and some other companies in the US. And so there's some fundamental reasons other than the tariff threats why we're off the all-time highs right now. So there's a bit of volatility, that's for sure. I think we're looking at a ranging pattern until something new breaks, which really with the Trump administration could be at any moment. But until something new breaks, I think we're between these highs up here and this support level here. And we called for buying if it broke through yesterday in the session I did last night, and that broke through, and this was a nice move up that could have paid out pretty well. Now, what do we have coming more immediate that we know of? Not could there be a headline that's unexpected with a new unexpected storyline, which could happen, a new tariff threat. The latest thing from the Trump administration was maybe they'll take over Gaza, which shocked a lot of people, especially in the Middle East. but I think they're looking for solutions to all of the war and problems that have been going on there. Maybe not the solution many were expecting to hear suggested out of the US. But my point is there are unexpected headlines, I'm sure, to come, maybe even before the end of this week. So you want to manage risk in an environment like this, whether it's with stop losses or using AvaProtect, etc. But also, it's a good time maybe to take advantage of the movements that are occurring as well. Now, beyond the unexpected headlines, we have things we already know for sure are coming, okay? And those things are on the economic calendar, all right? And whether we're looking at the US 500 or if we're looking at currency pairings, it can lend a bit of predictability when we know exactly what the announcements are and when they're coming, unlike these crazy headlines that can hit. So let's go to the economic calendar and have a look at what do we know is coming today and tomorrow. And there are some major announcements to come today and tomorrow. So we'll take a look at that. Today's announcements, and again, if you haven't used our economic calendar, you can pick the countries that you want, pick the major economies, maybe G7, European Union, United States, Australia, etc. And then those announcements will be here. And I filter only the high and medium level. I leave the low level announcements off in terms of importance level of the announcements, because they tend to have larger movements on the currency pairings and also in the equities and the indices. Now, we'll go past these announcements that already occurred, and I'll basically just say out of the European Union, this is Germany, much better than expected factory orders month over month. Huge increase, expected to go from negative 5.4 to positive 1.5, and it catapulted that up to positive 6.9. So the DAX, for example, has been on a strong bull run, and it looks like that could continue, and it's had some momentum today. Okay, this could be part of the reason why, and also the euro could be buoyed by this type of economic news coming out. Really strong factory orders out of Germany, and if we come down here, we can see upcoming announcements, and the first upcoming major announcement is out of Great Britain. And so there's interest rate decision expected that the UK will lower the interest rate from 4.75 to 4.5. Okay, so what effect does that usually have? How can you trade from that is the question. And usually as you lower interest rates, the strength of the currency would be not as strong, right? Because lower interest rates means you can get more of the money cheaper. And so that tends to have a weakening effect on a currency if interest rates are lowered. But with that said, it's already expected that they will lower the interest rate. So any weakening might already be built into the current price because the expectation is already there that the interest rate will be lowered. So what you're looking for here is if they lower it more than expected, or maybe they don't lower it and keep it at 4.75, then you would probably see a much bigger reaction on the charts, okay? For example, if instead of lowering to 4.5, it comes in at 4.75, that would probably have a strengthening effect on the pound in the hours following that. If it comes in lower than expected at 4.25, for example, probably that would have a weakening effect on the pound, okay? And so that's, in a general sense, what you would expect with interest rate decision. And if it comes in at 4.5%, which is usually how they come in at the expected rate, usually they're pretty solid with these predictions, then the movements tend to just kind of go up and down, and they're not so predictable. And I can show you that as a matter of fact. So let's use this tool here, the volatility tool. And what we can say is, and we can use the GBP USD pairing or any GBP pairing we want with this tool. And we can do different time frames after the announcement, as little as 5 minutes and up to 4 hours. And this is looking at what has happened with the past announcements when they come in. And if they come in at expectation, which is usually how they come in, matching the forecast with interest rate decisions, you can see the predictability here is not good. And what I mean is pretty much 50% of the time it goes up, 50% of the time it goes down after the past rate decisions when they came in at expectation. So, 57% bearish, 43% bullish, that's hard to trade off of in terms of trying to use data-driven trading, because it's almost like a flip of a coin. Which way will you trade if the rate decision comes in matching the forecast? And you say, well, what has happened if it doesn't match the forecast? Well, how often in the past year has it come in above forecast? Exactly 0 times. How many times has it come in below forecast? Exactly 0 times. Okay, so while the predictability would be higher, if it did come in above forecast or below forecast, usually it doesn't. Okay, so this rate decision, unless it comes in below forecast or above, it's hard to trade off of. Okay, so sometimes this tool, this volatility tool for the economic announcements, it not only can tell you what's something you might want to trade on, but it also can tell you something that you probably don't want to trade on. In this case, if this comes in matching the forecast, I'm personally probably not interested to trade off of that announcement. Now, if it comes in below or above forecast, then I probably try and find an entry point in the direction, an entry point that I like to go the direction I think it will go. Okay, and in general, if interest rates come in higher than expected, it causes a strengthening effect on a currency, and if it's lower than expected, tends to be a weakening effect. Okay, now what about some announcements that maybe do lend more predictability to trade off of? And the initial jobless claims out of the US, which are today, are one of those types of announcements. And I'll show you the statistics. So in just a couple hours from now, if we're looking at the Euro USD pairing, for example, 4 hours after the initial jobless claims are released, if this comes in above forecast, 100% of the time in the past, 4 out of 4 times, the euro has strengthened against the US dollar when jobless claims come in higher than expected out of the US. And that might make sense in your mind as well. Jobless claims, that means if they come in higher, that's bad news for the US economy, meaning more people lost jobs if jobless claims come in above forecast. And so it makes sense that the USD might weaken and the euro strengthen. And the statistics support that. They show you that that's actually what happens in the past anyways. Okay, so you might say, yeah, but that's after the numbers come in and it already moved. I don't have time to make my trade. And I say that's not necessarily true, because you see the average range movement over 47 pips in the 4 hours that follow. But within 5 minutes of the announcement, look at the range movement, only around 10 pips. So you have time. And it doesn't take 5 minutes to place a trade, by the way. If you already have your order window ready to go, if this comes in above forecast and okay, I want to buy, as long as it's, 10 pips or less rise, in the past, it's gone after 4 hours, average range movement, 47 plus pips. Okay, so there's no guarantee you're going to win, but this is data-driven trading. If you get an entry point you like with statistics like this from the past, then maybe you make a trade, right? And what if this comes in below forecast? Look at the opposite trend. 2/3 of the time, the movement went down. Okay, average range movement, 58 pips. And in the first 5 minutes, maybe it's moving 9 pips. Average range movement, it says. Okay, and you end up with more downward movement than up after 4 hours. Okay, it went down more often and the movements were bigger down than up in general. Okay, obviously you don't win every time. 1/3 of the time it went up, but 2/3 of the time it went down approximately. Okay, the USD strengthened when they had good news with lower jobless claims than expected. And you see the flip result if this came in above expectation. the opposite movement expected. That's what has happened in the past. So this is a very powerful tool to allow you to trade off of economic fundamental news even after it came in, after you've had the benefit of hindsight, of seeing the data as it came in, and then still having time to place a trade if you like the entry point and the directionality in your mind is predictable from that past data. Okay, so very tradable announcement in the past and perhaps still for today's announcement. Now, tomorrow really is the big day. If that didn't look convincing enough, we could go into tomorrow and there are announcements out of other areas, okay? Industrial production out of Germany, high level announcement, but maybe we'll take some time and you can analyze the data from that as well. We saw the data from the announcement that came in today, that if we had looked at that before it came in, it also was strong data to trade off of. But if this industrial production comes in above forecast, okay, 80% of the time the euro strengthens against the pound. That's what's happened in the past. So if it comes in below forecast, 83% of the time the pound pulls the euro down, just the flip opposite. So you see that these numbers, when they come in out of Germany, have an effect on the movement of the euro GBP. Okay, I've paired it against the pound here because it's the non-farm payroll tomorrow out of the US, and you probably don't want to play around with USD pairings when that big news hasn't come in yet. So maybe pairing the euro against the pound could make more sense for this announcement tomorrow. And look at the predictability based on how this comes in. If it comes in below forecast, 80+% of the time, the euro goes down against the pound. If this comes in above forecast, 80% of the time, the euro went up against the pound in the hours following that announcement. Okay, so high predictability based on how this data comes in from the past data. Okay, and again, you're not going to win every time you place a trade using this type of method, but if you use this method on these announcements, say for a month or two, you'll find which announcements you've had the best success with, statistically speaking, and zero in on exactly which ones you want to use as your strategies moving forward using this method. Okay. Now, it also depends on your work schedule and your sleep schedule and when are you available to watch announcements come in. I understand that as well. Now, the big ones tomorrow. Non-farm payroll is the biggest typically announcement of each month out of the US. It's watched by many traders and investors, and you see big movements on the charts after these numbers come in. Okay, so what do we see with the non-farm payroll? The expectation out of the US is not good. They're expecting job numbers to drop off dramatically from 256,000 last month or the prior month to 170,000 for this past month. Okay, these numbers are the prior month's numbers. So this is from 2 months back, and this is the prediction for the coming numbers, which are the numbers for last month. So the expectation is a big drop off in hiring in the US for the non-farm payroll numbers. Let's take a look what has happened in the past. Okay, if the numbers come in even lower than that, okay, lower than the predicted drop, below forecast, not good predictability, 50-50 when the numbers come in worse than expected. What if they come in above forecast? High predictability from the past movements. Look at the downward trend, meaning the USD pulling the euro down if the jobs numbers come in better than expected out of the US. There's a bigger reaction to the good news out of the US, the strong jobs numbers in these past numbers, in these past announcements, compared to if there's bad news. If the numbers are worse than expected, it's unpredictable with these past announcements whether to go up or down. But if the numbers come in better than expected, look at the reaction on through the past months. Okay, almost no movement up on the ones that didn't drop. Okay, they didn't. This one here and this one here didn't drop, but they certainly didn't move up much either. And the ones that dropped huge. I mean, we're looking 64 pip average range movement, and all of that movement almost is down. okay? Some of them reaching even near 100 pips drop, okay, in the 4 hours following the announcement. And if you look 5 minutes after the announcement, 3 of them were up, and only 42 pips range movement. And again, it doesn't take 5 minutes to place a trade. So if these numbers come in above forecast, and in the first 5 minutes you can catch these spikes up, or they've dropped only 5 or 10 pips, in the past you would have been a winner, because after 4 hours they were either flat or down tremendously when the numbers come in above forecast. Again, I wouldn't be looking to trade if this came in below forecast, simply because the data in the past is iffy. 2 times it went down, 2 times it went up in those 4 hours that followed. Okay, so you can go through this tool, through the announcements that you would be interested in trading on, and find which ones lend the most predictability. And you can have a plan for, if it comes in like this, I'll trade. If it comes in like that, I won't, etc. And be ready with the order windows open, waiting for these numbers to come in, and trade accordingly to how you think the data from the past shows that you have the best chance of winning. Okay. And again, I don't like the 50-50 stuff, but if I see 83% predictability from the past, as some of these announcements have showed us, then maybe I'm interested in trading on those. Okay. Now, there are other announcements we can look at. Unemployment rate data out of Canada is many times very predictable, and this, unfortunately, is at the same time as the non-farm payroll. So you have to pick your poison, right? Pick your tool. Which one do you want to trade on? So non-farm payroll tend to be the bigger announcement, so I think I would trade off that, because these are all at the same time, the Canadian announcements as well. Later in the day, there's a standalone announcement, consumer sentiment out of the US, and that may create a pretty strong movement as well. And so if consumer sentiment comes in above forecast, USD strengthens about 60% of the time. If it comes in below forecast, Euro strengthens 57% of the time. Not as inviting to me. It's too close to 50-50, that announcement. So I think I'm leaning towards the non-farm payrolls at this time frame. You could take a look at the Canadian numbers. They do have some predictability. If you'd rather queue off of those at that announcement time. And then also, this industrial production looked pretty inviting earlier in the day, tomorrow, out of Germany. Any questions, comments before we maybe move on to another strategy concept for fundamental analysis? I'll pause for a moment. Okay, I don't see any questions popping up right away, but I'll keep an eye. If there are any questions, I'll address them as I see them. Now, another area to find important news is the market buzz. And this market buzz, found right here, okay, in the menu on the side, can help you find news quickly. If you want to know why all of a sudden is Google trending the most, 476 mentions found online. All you have to do is click on it. It's the biggest circle there in that pictogram because it's trending the most. So, for a long time it was NVIDIA and other companies. So I see something's going on with Google that's negative. The expectation is the price may fall over 9%. Here's the technical analysis breakdown. The support levels are down here, and the expectation is Google may drop down into this 173, 174 range. That's the technical prediction, and they give you the technical analysis breakdown here. Okay, so if you want the technical analysis, there it is. There's your technical signal. Now, if you want to read, well, what's going on? This news feed is dedicated to Google, okay, to Alphabet Incorporated. And maybe you can find some articles that help clue you in as to why is the trend analysis predicting such a big drop for Google. Okay, Alphabet downgraded to hold from buy at DZ Bank. So DZ Bank downgraded Google from a buy recommendation to a hold. So you could click this link. Maybe they explain why. Okay, there's a summary there. You could click story continues and get the whole article. And here you can read, why did they downgrade them? Perhaps there's an explanation there that will help you decide whether you want to sell on Google with that signal recommendation here. Okay, after Meta, Google scraps diversity hiring goals, scales back DEI initiatives. That maybe will help save them on their bottom line. I don't know that that's a negative story for whether you want to buy or sell on them, but it is about Google. And you could scroll down and find, are there any articles here that might help sway me as to whether I want to go with this sell signal from Trading Central. Here's another article just from 3 hours ago. Google drops promise not to use AI for weapons or surveillance tools. Sounds like they want to open new markets for their AI tools, maybe to help their share price out. It looks like they will market their products for weapons and surveillance use. So you could read that article. That's probably maybe a bullish story long term if they're going to get into, selling their AI tools to more buyers in different fields. You might read that article. You can click on it and read it. So you go down and if you can't find anything here that tells you why Google should drop 9%, then maybe you don't follow that signal. But as you go down, maybe you do. Google shares slump, but other AI gains lift US stocks. Okay, again, talking about Google slumping, I can click and read the article, and maybe the article tells me why Google is slumping. Okay, read the article, and you can get the information straight away from an article that just came out 2-3 hours ago. Okay, this one 5 hours ago. So very easy to use this tool to find the most recent information that is out there within this system. And then you can make your decision. And it's nice because it combines the technical analysis tool and the technical signal there along with the news. And then all you have to do, in this case, the US market isn't open yet for Google. So when the market opens, you can take a look, where's the price? And is it at an opportunistic spot to go with that sell signal? And if you interpret that the news helps that signal, and you think that there is bad news about Google, then maybe it's a no-brainer and you make that sell with that sell signal. If the news tells you the opposite, and you think it's good news in the articles for Google, then maybe that tells you not to follow that signal and you look for something different. You can go to NVIDIA, I can go to these other stocks and see. Look, NVIDIA is expected to drop 18%. Something's going on there. Look at the technical breakdown and also read the recent articles and see whether you agree that that drop should happen. And if yes, then when NVIDIA is tradable on our system, maybe you make that move, okay? And this isn't just here for stocks. You can use this tool for currencies, even cryptocurrencies if they're available in your region, and find out what's the latest news about certain currency pairings or commodities. Gold, for example, is a big one that people want to know what's the latest news about which way gold might go. And we see here gold prices decline in local and global markets. Could read that article to see why, and more articles as you scroll down. Okay, and many times you have a trend prediction here as well, predicting whether they think gold will go up or down. Okay. Sometimes it just takes a minute for the trend prediction to pop up, or sometimes there's not a trend prediction for everything. Okay, so you could check back. Maybe there's a trend prediction like there was on the other on Google when we looked at it. For now, there's no trend prediction loading, but you've got the news to read. And once you read the news, if you think, I think gold should go up or I think it should go down, you can simply go here and find gold. And I would be willing to bet there's a signal on gold. Okay, there is. This symbol means there's a live signal on gold, and I can click that. And the prediction is for gold to drop. Okay, if you just read articles, and that first headline we saw alluded to the fact that globally and locally, gold markets are dropping. Okay, that's the most recent article that was listed there. And by, maybe not just by chance, there's a sell signal here on gold. So maybe you trust this signal more if you read that article about why gold is dropping globally, and you go with the short-term signal to sell on gold here. And if that's the case, then simple to do your risk management as well right here. So if I'm selling, I can say take profit somewhere down where there's a recent support level. I can see here, okay, this is where we started the week on gold. So this easily could pull back to where we started the week right here without even going below this gap where it gapped up at the start of the week. So if I'm talking 28.40 for my take profit, okay, by chance it already had it by default at 28.40, I would make $6,000 plus if it pulls down from here to here. Now the question is, what's my risk? Okay, stop loss. If I want my stop loss up here, just above today's high, if indeed it's going to drop, then it shouldn't go above today's high maybe. So if I put my stop loss up at 28.65, something like that, it's only $5 up. 28.65. I'm risking 1,300 and change to make over 6,100. So almost a 5-to-1 ratio, potential profit to risk, somewhere around there, 4.5 to 1. But maybe I don't want to risk 1,300. So now I've got my technical analysis lined up. I know I want my stop loss above this high. I want my take profit just before this gap, which probably would act as a support level. So I'll take profit just above that. So then now I just need the proper trade size. The direction was determined by the fundamental news, right? And the technical signal combined together. And then I just take a look and say, okay, if I do one lot, I'm risking 464. That's less than 1% of my balance. So maybe I'm comfortable risking 400 and change, okay, to make over 2,000. I only need to be right on something like this, 1 out of 5 times, and I can still profit. If I'm 25% accurate, 1 out of 4, I'm making a nice profit. Okay, so I can sell on this. I combined a technical signal from Trading Central. I'm pretending that I read the articles that were maybe suggesting gold is selling off globally. I only read the headline, but because this is a simulation, I didn't actually go through and read the story. But if that was an article that I read and it convinced me, hey, yeah, I think gold is selling because of the fundamental news as well, then now I'm simulating the trade I would have made, okay? Obviously, you'd want to read through a few articles, and if the fundamental news makes you think that technical signal of selling gold is accurate, then you do what I just did. And also, you see our system helped me risk manage my trade. So I know I'm risking even less than 1% of my balance. I know the exact dollar amount to my stop loss that I'm risking, okay? And, I a lot of times use 1% as an example number for the risk that I'm trying to set up in the order window, but you can put whatever percent makes sense to you. You can risk 0.5%, you can risk 5%, 2%, whatever it is your risk tolerance likes. And everything's here. It's built into our platform where you can get your technical signals and your fundamental news and your risk management kind of all packaged together for you to make your trades. Okay, any questions, comments before we end things today? Okay, great. Thank you all for joining. I don't see any questions popping up, so I'll sign off, and good luck with trading on the announcements today and tomorrow. If you follow up with any of the strategy concepts we went over on the economic calendar, and also take a look at that market buzz for your favorite instruments to trade, and see if you can find some news that maybe helps convince you which way you should trade. And maybe there's a technical signal along with that news in the market buzz that also can help you out with the support levels and resistance levels, etc., that they list within those signals. All right, everybody, thank you for joining and good luck with your trading.